Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Thursday, March 5th, 2026. This week just never wants to end. Late day rally today got the markets off their lows. A lot of pressure as oil broke 80 for a while. This is not a easy market. It's not a market that I want to be or you should be thinking about active trading. It's a market for raising cash and being very selective with any trades that you take. And potentially it's a market to be short. I just keep expecting one of these days we're going to get a roaring rally to the upside. That wasn't today. Now, futures overnight are up a bit, but they're up a lot more when I looked around 7 o'clock. There were some good earnings before we launch into the show here. MRVL up 13.7, Sansara is up 11.4, PTRN up 10.7, SWBI up 10.3, GWRE up 4.7, all on earnings. Big loser tonight, Gap down 8.6, and Costco is relatively flat. So again, my name is Jeffrey Scott, marketmripro@gmail.com. My Google group is called Top Down Trader, and my website's marketmripro.com. All right, this is for educational purposes only. Anything we talk about should be taken in the spirit of education and not investment advice. Intent of the video is to show you how I use my tools for top-down trading. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mentioned. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. My Google group's called Top Down Trader. It doesn't cost you anything. It's my mailing list. I notify you when I post things. I invite you to free educational programs, and I give you discounts off my stuff if you're a member. So if it's free and you get value, why not? Um, well, we get the monthly employment report on Friday, and then early afternoon we get Beth Hammock speaks. So it'll be interesting to see where employment is going. I think the biggest issue now is not going to be that data. It's going to be what oil does. And I think a lot of us would like to see a Fed rate cut, stimulate home building and other parts of the economy. But if the oil keeps staying up where it's at, it's not going to be conducive, I think, to a cut. So I'm not sure how much the employment's going to surprise or move the markets. Earnings wise, it was a decent sized night. Marvell, Samsara were certainly doing well. A couple earnings in the morning, none of them look like they're that significant. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I think we still got some more earnings to come next week, but we're going to start seeing them slow down soon. And then we'll start the next quarter. Any information about anything I say, how I trade, tools, costs, marketmripro at gmail.com. And if you have any issues with the program from a setup perspective, any bugs, anything, let us know at coding at marketmripro.com. Over the last couple of videos, I've had a couple of issues using the product. So just letting you know, I get them first. The best way I know to try and find something that doesn't work is to use it. And so I am in version 26. Most of you are in version 25. And I think we got it almost ready for distribution. And you'll see I think a pretty um, well-functioning version. Being a software vendor, I mean, I'm a doc, remember that? Being a software vendor and being responsible for third-party data feeds and making sure the data gets incorporated and there's no glitches and errors. Thank God I have Praveen. That's all I could say. On the daily briefing, you could see volatility really up a lot, 6.45, although it was up 11%. Dollar was up 0.26. Everything else is down. That includes Bitcoin down another 2.5%. The diamonds led, well, they didn't lead. I just didn't sort correctly. Well, Diamonds down 1.62, Russell down 1.91. That was the big one to the downside. Spider down 0.56, and Qs were down 0.3. The new highs minus new lows, neutral. They're not, they're not great. I mean, 14 for the NYSE, it was 200 2 weeks ago, and the Nasdaq is still negative. So we got some breath issues. If you look at three different industry groups, and each stock assigned into sectors, or three different indexes, each stock assigned into sectors and industry groups. Blue and green represent today. The gray represents yesterday, which would have been Wednesday. You could see really bad breadth, number of positive sectors, industry groups across each of the indexes. And then 24% stocks up in the S&P 1500, 31% in the Nasdaq, and 26%, yep, up in the NYSE. That's a pretty awful breadth. And if you look at how many stocks are below, or excuse me, above the midline of their Bollinger Bands, just to give you a sense of how poor the breadth is and how the market is in a downtrend, only 37% of the S&P 1500 is above the midline, 38% of the Nasdaq, and 38% of the NYSE. If we look at what worked and what didn't work today, well, nothing really worked that well, but at least energy was up 0.5%. Technology was up 0.24. Some of the big cap techs rallying a little bit after a big sell-off as a software. Discretionary up 0.14. You got four things that were down 2% or more. Industrials, materials, staples, and healthcare. So it was a rough day for many. If we look down below and we look at themes, the only themes above 2% were cybersecurity and software. Software rallying up after pretty significant pullback. Then you have oil, gas, exploration, you've got cybersecurity, cloud computing, e-commerce, and internet. And if we look at what led to the downside, copper, uranium, silver, cannabis, metals and mining in general, gold, transports, video games, just a lot of weakness here. A lot of weakness in the market on Thursday. Will we rally on Friday? Remains to be seen. All right, what else can we do? We can go here and we can look at the, actually I'm going to do an audible. I thought this was interesting. I created uh, a matrix of 4 so I could look at various things from time to time. And I've got minute charts, daily, minutes, hours, daily, and weekly. I'm sorry. And let's just start with the spider. Let's enlarge this. You could see today that, let's get to today's data. Oh, where did you go? That should take me to the end. All right, you could see that we rallied up, and you'll get a better sense when we look at the bigger time frames, but we were weak into the close. Not to the extent of the prior lows, but the rally into the close did not hold up as well as it might appear. If we look at the minute charts, you could see um, starting around 2:30 or so, the market started to rally. These are the hourly charts. If we look at the daily chart, and this is where it's interesting. It's a lot of doom and gloom and how bad the market is and how much money I've lost or you've lost. I'm not saying personally, but people talking. We've barely started to roll over. In fact, if this is a bear market coming, we're not even close to that point. And if you look at the weekly, again, we're just starting to roll over, and look at where the seasonality is. So if you want to be hopeful and you want to be bullish, do we have just another couple of weeks and then we get into, you know, a couple, into the next couple of weeks? Do we turn around and start to go higher? I don't know, but I do know that we're not in a bear market. We've not had a major sell-off, and we're not at lows. So as I mentioned yesterday, we're all talking about looking for follow-through days, looking for signals that we're done going down. And I asked the question, do bottoms form at tops? No. Dailies on my timing model. The Qs are the only one that are somehow still holding up with the buy signal, just because it closed above the moving average. The weeklies, that's the dailies. That's the weeklies here. You could see the spiders and the Russell are holding up barely, but the weekly Qs and the weekly diamonds are now in a sell. Now, the weeklies are not finalized till the end of the markets on Friday. So the weeklies could still turn positive, but I'm not bullish at all here. I have been raising cash. I probably still have too many longs, which I'm going to continue to consider, and I'm not opening a lot of new positions here. I think it's still time to be cautious, but we are going to bounce at some point. And think about what it was like on Wednesday. We had a pretty significant move. So let's open these up. So we got the daily spider, and what we talked about the last couple of days is we still have perhaps another couple of days of negative seasonality. We keep pulling into this 100-day moving average, and we close right on that 100-day moving average today. So we are at a support area. Unfortunately, right above us, we've got the 50, a 21 EMA, and a 17. That's become resistance, and we're bouncing around this very narrow range. Which way will it break? I don't know. You look at the Qs, not as healthy. They've broken down below the 100. In fact, the 100 looks to be coming resistance here. And so we are in a range here, kind of going sideways. Will we break down to the 200 and will it hold? Or will we break above the 100? Don't know. I mean, I think to me, I'm looking for one of those to give me a sense of what I need to be doing. The diamonds, they broke below the 100s. We'll see if they can't get back above it earlier. But again, you look at this and we see weak seasonality for another week or so, and then the seasonality, at least for the most part, turns positive. So the diamonds are breaking down on the daily. Not pretty markets. I think we have to recognize that. And the Russell is stuck between the 50 and the 100. You got support here and resistance here. Which way will we break? Now the VIX, we thought this might have been the pop, the drop, and a sign that maybe the markets are going to turn around, but the VIX was up big today, up 11%, closing off the highs, and we still got this problem where we had this trend that even coming down didn't mean coming down to where we typically end up after the VIX pops. And if we look at the dollar was up today 0.23%. It looks like the dollar might be trying to break out here to go higher, but don't forget, dollar's way off, and I'm not sure that the dollar is going to be that relevant just yet. If it goes back anywhere close to those prior levels, prior highs, it will not be great for the U.S. stock market. Gold consolidating after a big run up and a correction. Silver consolidating below the 50, less bullish. You can see a super strong day for oil. The good news is it closed off the high, but I think oil right now, which closed at 96.31 on the USO, it is going to pressure the economy. If we start seeing fours or fives anywhere outside of California in front of the price, and I'm not talking 50 cents, I'm saying $5, what's that going to do to our pocket change? And what's that going to do to the retail market? What's that going to do to consumer confidence? None of that good. Natural gas, struggling down here. Not a whole lot going on, at least in the U.S. 10 years rallying. Now bonds are being sold. They're seeing a worldwide bond sell-off. Well, that's going to lead to rates going up, and we see the 10-year popped up 1.59%, and the 30-year popped up 0.83. Now the good news is they're dojis and they're indecision, and we're still pretty much off their highs, but it's something to watch. And if you're thinking about getting a mortgage, whether it's a new house or refinancing, you don't want to see these going up. More pressure on the U.S. markets. If we look at the buckets, you could see we really moved to the left. And the white bar represents stocks that are below the Bollinger Bands. Now, if you think about it, stocks are supposed to be in the Bollinger Bands 90 to 95% of the time, two standard deviation channel. Um, well, when you have 18% below on the NYSE, 17% below on the S&P 1500, 10% below on the NASDAQ, and 15% below on the Russell 2000, it's telling you there's significant weakness. Is it extreme? Is it so low that the markets are going to bounce tomorrow? Well, they certainly could bounce, but I'll show you what low looks like. This is low. Oh, come on. Well, if it works, it's going to show you, and it doesn't look like it wants to change. It will show you that we got to 50% or more of the stocks were below. All right, market breadth. You could see, I don't want that open, that the NYSE is now broken down below the 50. You could see that the NASDAQ composite, like the Qs, are bouncing around you know, in a downtrend. So not bullish either way. You could see new high, new lows were mixed. AD lines were negative. Somehow up-down volume was positive on the NASDAQ but negative on the NYSE. You could see we've got Hindenburg omens preceding this drop-off. Not a big shocker. I'm a big believer in those. And we had Hindenburg omens firing before the NASDAQ dropped down. I don't see anything now that says that we should be reversing. And when I look down here at the 13-week new high, new low, which is to me a very good predictor of a reversal, we're at 0.41 and 0.31. Not reversal signals. Over here, we got down to the range of 20, and that still wasn't as low as it can get, but it was close, and we did reverse. If we look at ratio charts to see what's strong right now, materials has given up some. Oh, I hate when I do that. Let me see if I can't get that back where it belongs. Okay, perfect. You can see how strong communications are, energy. Staples was strong, it's weakened of late. Technology was weak, trying to show some strength. Industrials has been strong, but it's weakening now. Our financials starting to come back. We'll have to see. Real estate holding up as our utilities. Discretionary, not so much. And this is healthcare, not so much. And discretionary, not so much as well. If we look at a couple of the other major indexes to get a sense on is there anything that says a reversal is anywhere close, as we look at the spiders, we're at 0.36, we're at 0.38 on the S&P 1500, 0.37 on the Russell, 0.31 on the NASDAQ. Those are not high numbers by any means, but none of them suggest a reversal is coming. Now let's look at the sectors. We're going to skip the sectors tonight. Let's just go look at some of the key stocks. And when I say key stocks, some of the heavily owned stocks that I and probably many of you have in your retirement portfolios that are not actively traded. Amazon, start talking about buying it here. It's moved up above the 30-period WMA and the 21 EMA. It held up remarkably well in a bad market, up 0.98%. I think Amazon still looks good. Apple, in a good market, they launch a bunch of new toys, so to speak, including a laptop for $699. I think they're going to sell like hotcakes, yet stock has not done anything. I wouldn't touch it until we're back up here in the winner's box, which is above that yellow line. Google, exact same story, except they didn't release new notebooks. Right now it's in a downtrend. I want to be purchasing it until we get back up above that yellow line. Meta, it's above the line. It sold off hard after initial gap up on earnings. Still got to clear the 200. Yeah, maybe it's good to be nibbling it here. I'm not. Netflix continues to come up, a nice daily move, closing back to the 200 or so, which is where I think it pulls into before you see resistance, and making up for the fact that there was a big sell-off on the Warner Brothers um, escalating prices and the pricing war of Paramount, which Netflix, thank goodness for shareholders, lost. Tesla, just like the others, except this is an interesting buying point. It's coming off the 200. If break above this yellow line, which has been a blanket, and a close above it, might be interesting to start nibbling. Nvidia, Nvidia's in a box. I'm waiting to see if it can break out of this trading range. It's a pretty wide trading range, but it's been in it going back to November, and I don't know any reason why it's coming out anytime soon. And then Microsoft finally, to me, may be actionable. It's now broken above the yellow line. It's flipped to a buy signal by my timing model. You're still buying something that's going to have a lot of overhead supply. You're going to have to get through the 50 up here. I think Microsoft is finally done going down and goes higher. Biotech sold off hard today, though it doesn't look that bad here. If it doesn't rally tomorrow, I think biotech might be done. Such a news-driven. IGV is software. Software is having a nice move. Does it pull up to that 50 before it struggles? Maybe. Data centers have broken down below the yellow line. They're still in a nice uptrend, but a pretty significant pullback. So I'd say questionable, which is for me too bad because my remaining holdings are all data center related. I still believe it's going higher. Right now it's in one of its funks. And then we're ITA defense. It's kind of interesting. You read about how the U.S. is expending its stockpile of missiles and bombs. Well, someone's going to have to make them, which means it's going to kill our deficit, but it should put a lot of money into defense stocks. Yet it seems to have failed its breakout. Very challenging market. All right, now let's go into the JS layout. Let's just jump to the contras. Is this where we ought to be? That's not where I wanted to jump to. I want to jump here, and I got contras. Ooh, they're all green. That should tell us something. Dog goes up when the diamonds drop. Dogs have broken up. It should have clear sailing up to the 24 area, 2450. Is that enough of a move? Probably not. Let's see if it can get up there and break out above the 200. FAZ goes up when financials are weak. We got messed up here. I got to remind Praveen again to fix the split from back in September on FAZ. SOXS just had a split, so we need to fix the split there. So let me write these down so I don't forget them. Kind of how we do things. I let them know what I find. We have some lists of splits, but sometimes they don't include all the ETFs. So it was FAZ, SOXS. All right. SPXS goes up when the S&P 500 goes down. It's pulled back here, but I'd be watching that. SQQQ goes up when the Qs go down. Looks a lot like the SPX here, just at a different price area. Yeah, they're different, but they look similar. And then lastly, TZA goes up when the small caps go down. So none of them look great. None of them have broken out and started running, except for maybe the dogs, these are instruments that go up. So I know some of my friends are starting to build up positions in these. When they run, they can run a lot. They're not something you want to hold over a long period of time. But if you do believe the market's going to take a dive and get down to 20%, 15% correction, these are things that you can do to protect your portfolio. Now, lastly, let's just go back to the impulse list, and you'll see that the A plus list is barren. There are very few. BSM is a energy play, Blackstone Minerals. I used to think it might be gold and silver, but what you're going to see here, oil and natural gas, mineral interests. Um, Nice uptrend, breaking out here to what looks like it might be, at least for this run, highs, but it's been much higher in the past. If I look at the fundamentals, I can see it makes some money. Growth is bouncing around. They have had a lot of surprises on the earnings, and it pays a whopper 11.2% dividend. Now, the problem with this and other small energy plays is when we end this war with Iran, and we will end this war with Iran sooner or later, you're going to see oil act like the rug was pulled out from underneath. Dow Chemical used to be in the Dow 30, breaking out and running. What's the news? So you'll notice one thing that's different is I have now separated so I can have the fundies open and I can have the news open. So what does it say? All the news is for the Dow, not the Dow stock. Oh well, what I like about one of the things that we built in is you just click on any link and you'll pull up the news report. So unfortunately, when we're searching for Dow, we're getting about the market. AMPX, let's look at this at a weekly perspective. So this stock has been in a gradual uptrend for some time. Looks kind of interesting there on the weekly and on the daily. Um, it's breaking out. What do they do? Amprius Technologies, lithium ion batteries, aerospace, defense, and EVs. All right, well, that one looks interesting. Again, am I advocating going out and buying a lot of stuff now? No, absolutely not. And then TNGX, this must be news on this biotech. Doesn't make any money, minimal revenue, typical early stage biotech. Another cancer pact. So they signed to help develop a new drug. So that's kind of good news because that's building up potential for downstream revenue, making more attractive for an acquisition. I don't know anything about it. To me, it's a little bit extended with this move. I'd expect it to drift down like the seasonality predictor, but it might be one to keep an eye on. I'm boring tonight. I apologize for that. I'd love to tell you I got some great stocks to buy. I don't. I think I'm going to spend tomorrow positioning myself for the weekend. If the market opens and goes higher, then I'm probably going to buy some contra ETFs into the close because I still think we might go lower from here. If the market trades down most of the day, I'm going to still keep raising some cash and still look for a rally, and I might use any rally I get to lighten up more and maybe to start some shorts. Right now, I think I'm in the business of not buying a lot. And I wish you luck. I hope you have a great day on Friday. As I said before, this is a tough market.